Uh, Good evening, friends. Good evening, friends. This side Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to covering a very dedicated topic on USD to Japanese yen. One of the directs for US dollar and one of the indirects for Japanese yen. And in my view, this topic is turning very, very important nowadays because Trump has already been elected as the president for United States, and he is looking forward to add two people, vacate positions in the Federal Reserve. And in my personal view, that he's going to focus people who are not dovish, rather those who are hawkish, because during his election campaign, he already said that he's looking forward to have the hawkish view on the Fed, and he would like to have multiple hikes. So things would be very, very great in the upcoming times. You are getting a blinking screen right up front on your computer. This blinking screen is a confirmation is taken from the financial terminal which has been subscribed by Treasury Consulting LLP. So this financial terminal will suggest you that the screen will suggest you that sitting today a dollar to Japanese yen is trading at 112.45, and this is very high. Believe me, this is very high because pre-Trump the Japanese yen was trading at 100 approximately 102, and it was a big prediction that it will move towards 98, and it should have moved towards 98, because considering the fact that an economy whose debt to GDP ratio is 375%, an economy who is fully reliant on the debt, an economy from the last 20 years doing huge amount of monetization of the national debt and also doing a huge amount of quantity leasing. How can you believe that this economy all of a sudden jumped from the so-called should be 98 from 112? The real reason is the increase in the dollar index and the statement by the Trump. Now, we all know that dollar index sitting today is trading at roughly 101, 101.32 to be honest. And because of that, all directs are rising. Now, what do you mean by directs? Here I am referring to American directs. All directs are rising like your so-called USD INR, USD PHP, Philippines peso, your Korean won, your Romanian RON, your Czech crown, and your Canadian dollar, your Singapore dollar. If you look carefully, then all directs are rising nowadays. And why these directs are rising? Because they are linked with because they are quoted against dollars. If you carefully see, then all directs are rising and all indirects are losing. Now, indirect stands for GBP dollar, your euro dollar, your New Zealand dollar, and your Aussie dollar. So if we carefully see that things are moving towards a negative perception, and things are moving in such a way that now Japanese yen is heading towards 115, and that is for sure. But the purpose of the call is to give you a trading tips that how you can trade the Japanese yen. Now, if you carefully see here, you will get a chart of the last 10 years of the Japanese. We can change the chart to 5 year also. Now, let us change to the chart of last 5 years. Now, this is the chart of the last 5 year, and this yellow screen which you are getting, this screen suggests that this is the Nikkei, Nikkei index. Now you carefully see that Japanese is rising, 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 rising. Is sorry, was falling, and now it is rising, rising. Let me show you. Let us go for this YTD, year till date chart, and you will get to know that this was the scene of the Japanese. This was the scene of the Japanese. Now Japanese evolved in February. It was approximately here. Now it went down, 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 down. It come here, and now it is again. It has again risen. If we carefully see that Japanese got appreciated by almost 5%, and if we carefully see that post-Trump, in fact not post-Trump, from August 2016, both Nikkei and Japanese yen are moving in a tandem, and post-Trump both are rising. In fact, if you carefully see the American indexes like Dow Jones, it is trading at 19,000. We all know that. We all know that the GDP. We all know that US GDP is not coming good, because US GDP is not coming good. So of course, I don't think so that the Dow Jones should trade at 19,000. but this is again the Trump effect. That is why Dow Jones started trading at 19,000. And Standard Poor is trading very higher. All American indexes are trading higher. All directs are moving very higher. So if you carefully see the chart at the screen, which is blinking right now, the Japanese yen is trading at 112.443 or 44. If you compare this downstairs, which is MACD, right now it is MACD here, then you will get to know, right now it is MACD here, then you will get to know that MACD is showing you a signal of selling. MACD is crossing. So MACD is going with signal of selling, but not at that level, because there is a problem with technical analysis. Now here if you look at MACD is not telling you whether you should sell right now or you should wait. But here you have to use your fundamental analysis, and you have to see the market, how things are going on. The dollar to Japanese carrying trade is moving up. The reason is very simple. If somebody few months ago able to convert the dollar into Japanese yen at 98, now the same gentleman able to convert at 112. It is going up. There is no increase. There is no increase in the US in the Japanese interest rate. Rather, they are moving towards negative. We all know that due to NIRP negative interest rate policy, Tokyo is continuously decreasing interest rate, and they were the one who started it actually. So if you look at MACD is clearly telling you that you have to sell, but how you have to sell, you need to wait. Now if you carefully see here, this is the point where the Japanese move up, and if you carefully see that even while making a presentation, the Japanese yen was trading at 112.44. Now it has increased to 112.51. And in my personal view, that Japanese yen is heading towards 150, is heading towards 125 by December 2016. Now we are not in a situation to give you a long-term picture, because of the fact that the Trump is going to take up his position in January 2017, and from where we need to renegotiate how the currencies would go. But sitting today, we all know that Japanese yen is moving up, as simple as that. In my personal view, Japanese yen is heading towards 125, but it will take a small break at 115. At 115, I think that the traders should create a sell position. However, they should create a sell position using strict stop losses, because this position can backfire also. If it backfires and Japanese yen will start moving towards 116 and 117, then I seriously don't suggest to create further sell position. I think you should need to wait. In my personal opinion, if today, which is 24th November 2016, by in the next 2-3 days we will see 114 Japanese yen. Yes, if due to the cancellation of the trans TPP by due to the cancellation of the TPP, it matters. It might go 114 in a day or so also. So I think 115 is a point where we need to I would say we need to create a sell position. But at the same time, we should also think that sell position should have a strict stop losses, and we should create using options, not using futures. Now to prove this point, I would like to change this indicator from MACD to RSI, and I will refresh the chart here. Now the chart remains intact, but if you go with the RSI, you will get to know 3070. You know that it is the particular line, it is above 70. Now since the chart is above 70, many of the people, what they do, they just simply go and sell. I don't think this is a time where we need to sell. I think we should wait. 115 and 116 is the right point to sell, but at the same time we should seriously think that we should have our fundamentals in place, and we should think that whether our stop loss is able to sustain at 115, or do we need to move forward. At the same time, we would like to add that all those people who would like to sell their positions, those who would like to sell their positions, they should use using options contract, especially proven strategies like range forwards and others. So this was for the day, wherein we discussed about Japanese yen. The screen is blinking, so with the blinking screen you can make sense that how the trading is going on. I would like to also draw your notice that in the next week there are many indicators of the Japanese which are scheduled to come, but I don't think that these indicators would have a substantial impact on the Japanese yen, considering the fact that now currency is getting more emotional and then fundamental. And at the same time, I would like to stress the fact that Japanese yen volumes are also going up. Like, let us show you the volumes also. If we click this, then we will get. If we click this and refresh the chart, we will get to know the volumes also of the Japanese yen. Now see this, the volumes are rising up. Now here volumes were neutral. Now from here, especially here after Trump, the volume in the Japanese yen is rising up. The market is still believing that there is still a potential for dollar to Japanese yen carry. And I also strongly believe that there is still a potential. And I think the potential of dollar to Japanese yen carry will move higher. The reason is absolutely simple. The reason is Japanese is not in a situation to increase the interest rate, and at the same time market is not in a position, and at the same time dollar is rising. Dollar index is trading at 102. I think if you are an American investor who is looking for a carry, then you should wait. Let Japanese yen come to 116 and 117, and from here you should create a sell position. And since you are an American investor, so of course carry matters to you. So in my personal opinion, that if Federal Reserve would, in my personal opinion, that if Federal Reserve would rise interest rate by 25 basis points, which Trump is saying that they would rise by December, because there are a lot of probabilities going on. But I'm not sure, because Obama would continue to be act as a president till that amount of time. So in my personal view, that I think January would be the time when we will see that interest rate would rise in Tokyo. And if this would happen, then I think the probability of carry, or the future of carry, would go higher. But at the same time, I would like to further add that all those people who are looking forward to trade, all those people who are looking forward to have carry trade, they should do more carry trade using options than using plain vanilla forward contract, and they should do using out of the money forward options. So this was for the day. And to conclude, we would like to add that the dollar to Japanese carry trade would continue. The momentum would continue for a longer period of time, but at the same time, we should continue to focus. We should continue to focus on your so-called the hike in the Fed rate, which I think would happen because Trump is more or less he's a hawkish guy, then he's a dovish guy. For this, we thank you very much for your time, and you are always welcome to contact us at 919899242978. And my email ID is rahul.magan@treasuryconsulting.in. You're welcome to visit our website www.treasuryconsulting.in. Thank you, and have a great one.